this right here might be the only top-down analysis strategy that you need for NAS100. A lot of you have been asking me, how do I do top-down analysis? How would I do it if I'm looking at the lower time frame? Me personally, I do not look at the hourly really, mainly only for a sense of direction, bias, and for overall higher time frame points to target. So looking at this chart, I want you guys to think what you would do. What would you do in this situation? Now, what would you do in this situation? Well, as we can see, what we had was we had higher time frame highs, and we finally had the shift right here. Now, this is one of the main confluences that I do look for while I'm trading. I look for shifts within the market. Now, a lot of people, they're going to get caught up trying to catch every single shift, every single change of character, but that's how you will lose a lot of your trades. You cannot be waiting for shifts on internal structure. You need to be waiting for shifts on external structure. That is the key factor of this. So now that we have our highs marked, we can also mark our lows. We'll just mark this as overall external low because we broke this one from this point right here. And everything within this area is all internal. So you do not want to be trading within this area. You're going to get caught up, you're going to get trapped, and you're going to lose a lot of trades if you're trying to catch multiple trades within this one little consolidating area. And instead, I'm going to just delete this so it looks a little bit more clear. Instead, we use this as liquidity. So we're going to use this top side as liquidity. And we're also going to use this bottom side as liquidity as well. So these are the two main steps that I like to do when I'm on the charts in the morning, when I'm trying to look for a trade. I mark up my external points, and then I also look up my liquidity points as well. So simply put, all we want to do now is wait for price to come back down into this external low that made the shift within structure. So we swept these previous lows to the left, and we broke up to the upside, breaking that previous major high sitting right here. So step one, wait for a sweep of a low, and that low also has to be external. Step number two, wait for a shift within the market, and that also has to be external structure. Step number three, what we need to do is we need to look for liquidity points. So number one, we have our sweep or the break of the previous low. Number two, we have a little impulse. We accumulate our second break right here, breaking this last previous major high, external high sitting up here. Step number three, what we have is our liquidity marked. So top side liquidity got taken out, this high got taken out, and now what we want to wait is for price to come back down into mitigate this previous major low sitting right here that previously swept last major low, external low. Take out all these internal accumulation built up orders to then continue back up to the upside potentially. So step number four, you want to mark up that low that caused the shift. That is our newly formed demand. So right here, we will mark up this demand and this external or overall major low right there. Step number five, obviously, is wait for the mitigation, and then we could drop down to the lower time frame. So let's play this out. Let's wait for this to come down to tap into our zone. Here we are. All right, so what we did was we came in, we mitigated this low, and now we could drop down to the 5 minute. So now here we are. We have our step 5, wait for the higher time frame mitigation. And now step 6, all we want is for the price to do the same exact thing on the lower time frame within that higher time frame mitigation. So what we see first is we have a sweep of this previous low sitting right here. So we have low number 1, we have low number 2 that took out the previous low, but then shifted to the upside immediately. That is now not a brick structure, that is now called a sweep and a reversal. More so a shift within the market, change of character, whatever you want to call it. So now what we'll do is we'll mark up our zone. We'll then go to the 1 minute, see if we can get a refinement. So we have a refinement right here, and here we are. So obviously step 1, we've got our sweep. Step 2, we got our break of structure from the previous high, external high of this overall downtrend leading up into this higher time frame mitigation. Number 3, we've got some accumulation built up right here that we can take out to potentially target the upside and mitigate this low. Now step number 4, we wait for the mitigation of that low, just like I said. We'll play this out, let's see what happens. So as you can see, we come and tap down into that low right there on the lower time frame. We'll let this play out, and all we want to do is we want to target that previous high of the move right there. Play it out a little bit more, wait, and there we are. So there it is. This is a top-down analysis strategy for NAS100, indices, US 30, whatever you trade. I trade NAS100, US 30, and I also trade gold. It works on every single pair. This gives you way more confluence and way more confidence entering a trade. That's really it. This is a very simple technique. All we're waiting for is the same thing on both time frames with the mitigation on the higher time frame zone to then continue to look for a lower time frame execution. Also, if you guys do not know, my Trading Nut interview and podcast did drop, so I will link that in the description below. Also, my monthly Discord finally re-released to the public, so if you've been wanting to get into the Discord, now's your opportunity. All my socials are in the link description, and that's it. Hope you guys like this. Leave a like, comment, subscribe. Let me know what you thought in the comments below, and I'll see you guys soon.